Hi, good evening, everybody. Welcome to the webinar, Will the Market Recover? I'm Ming Hui from Phillip, and this webinar is held in collaboration with Trading Central. Speaking to us tonight will be Mr. Ming Lam, Trading Central Deputy Head of Research, and he'll be discussing the signals that investors like yourself should be looking out for to navigate through the current market climate and position for potential market recovery. He'll be sharing insights across the major assets, including stocks, Forex, and commodities. But before that, we will have Ms. Dominica from Trading Central to start off the session with some useful plugins that can be integrated for free onto the Phillip MT5 trading platform. Just a quick reminder that if you have any questions throughout the course of the webinar, please feel free to drop them into the questions box as we will have a live Q&A session towards the end. And now, without further ado, let's have Dominica speak to us.
Hello, good evening. Thank you for having me, and I hope you're gonna enjoy the webinar in collaboration of Trading Central and Phillip Nova. My name is Dominika. I am Client Success Manager from Cyprus, and I'm here today to tell you a few words about Trading Central tools that are available for free for Phillip Nova MT5 platform. So first of all, I would like to just to show you where you can find the tools on the Phillip Nova website. Under the tab platforms, there is a Phillip MetaTrader 5 suite. If you click this tab, you will get to this page, and you just need to scroll down a bit where you're going to find a description of our tools. So the first one are the indicators, and you have the download button, and just below there is a description about the TC Market Bus, another of our tools. Again, down below there is a download button for the plugin. So if you download our plugin, it comes as a set of indicators and additional tools. I will just show it to you now on the platform. You're going to find them in the navigator window. Under indicators, you're going to have the Trading Central indicators. It's a set of indicators where the most important one is the analyst view. So if you would like to use the indicator for the particular asset, you just need to drag and drop it to the chart. From this pop-up window, you click OK. And our indicator is overlay on the chart. So it's very powerful tool that gives you the preference scenario, which is in this case decline. So it's a sell signal, we would say. You also get the support and resistance lines, and down below you get the description of the particular report for the part here for the pair of Australian dollar, Singaporean dollar. Okay, and the indicators are responsive to the time frames. So if you change the time frame on the chart, the levels will change, and in this case also the preference change for buy. So it takes a bit of time to load the lines, but basically you can check on different time frames, and you're going to get different levels according to your trading style. What else I wanted to show you is the packet of tools which you can find in Trading Central Expert Advisors section. So here again, you just need to drag and drop, click OK, and wait for a window to load. Here you're going to find free tools. First one is called Forex Future Ideas. The second one is the Economic Insight, the upgraded economic calendar. And the third one is the famous TC Market Bus, which is an amazing tool that helps you to navigate through the news and summarize what's going on around the world for the different asset classes. Today, I just wanted to quickly show you the possibilities of economic insight. As I mentioned just a second ago, it's upgraded economic calendar. You can filter, of course, for the country. So I just choose Singapore because maybe that's what you are interested in. So you can choose the events that are related only to the Singapore. You can also filter by importance. Let's choose one. Here we go. You have the description, and you can add this to your own calendar, for example, Google Calendar. And we have 4 tabs with 4 different charts. So we have the event chart that shows the prediction and the actual of the particular event. We have the price chart. So here you can already see that this event was correlated with some Forex pairs like American dollar, Australian dollar, and you can see what was the actual against the historical events. And we have 2 very interesting tabs, volatility and impact. So in the volatility tab, you can see how this particular event ended in past. So here we can see that this event ended bullish 8 times and bearish 4 times. So it gives you indication already that maybe it is a good opportunity to have a buy trade for this particular asset, for this Forex pair. And you can change the time frame, so it could be 1 hour after event, and you can even filter for the events that were actual above forecast, below forecast, and that matched forecast. Okay, so this is about the volatility, but we also have an impact tab that is also very, very useful, where you can see the range of pips for the particular event, how it ended up in the past. So this event had a range of pips, 14.6 pips during 1 hour following the event, ending up with bullish trend. So it's the tool that is really, really useful if you are trading on economic events. And I highly recommend for everyone to download our plugin from the Phillip Nova website and start using the tools so you can take the proper decisions while you are trading. And now I'm just passing the microphone to my colleague, Ming, who will tell you more about the subject of today's webinar. Thank you very much.
Okay, thank you, Dominica. And well, welcome, ladies and gentlemen, Phillip Nova friends. We haven't speak to each other since our last webinar in February. So how are you? I trust you are doing well. Okay, and yeah, good evening, good morning, or good afternoon, depending where you are. Okay, now today it will be a short webinar. I won't take you a lot of time. I will spend 30 minutes to 35 minutes to talk about what are happening in the market. Okay, and I will introduce to some interesting, maybe you will be some assets, instruments, forex, stocks, commodities that you will be interested in. Okay, now those stocks, commodities, and forex pairs I'm talking about today could be found in the Phillip Nova trading platform of those CFDs. Okay. Okay. So are you ready? So let's start. Now, our last webinar was in February, and for these more than 3 months, a lot of things have happened in the market. And well, as you know, the market has been very volatile to the downside. And well, maybe those friends who have been following my webinars know that I like to put my conclusion at the front part of the webinar. Okay, and you know, I myself, I do not like to listen to long speech or lectures, and whenever the points pointing out are too many points, there are too many points and too much details, I just I just sleep in the first 5 minutes of those talks. So today I won't let you to do so, and I will do it very clear. Okay, I just point out 2 points. There are only 2 points in this webinar. Okay, whether you are going to want some advice to protect your portfolio, or in this volatile trading times you want to do some bottom fishing or bargain hunting, this webinar is for you. Okay, now I repeat, only 2 points for my today's webinar. Okay, are you ready? Let's go. Now, number 1 point, as the topic points out, will the market recover? Well, it is a tricky topic. You know what? For over 100 years, markets always recover, but it depends on how long the bear market will last. Okay, sometimes it will last just weeks, sometimes months, or sometimes in years. Okay, you remember in 2020, 2 years ago, when the pandemic occurred, when the pandemic broke out, in March, the market was in nosedive. Okay, there was a recession. Okay, for how long? There was a bear market also. For how long? 1 month. Okay, 2 years ago, March. Do you still remember that? And this time it has been on. Well, the market peaked at November. Up to now, it is more than half a year. Okay, so now this is my point. Point number 1. I have 2 points. I repeat, I have 2 points today. Point number 1. There are too many bears. Okay, the market atmosphere at the moment is very bearish. Okay, and you know, I will not be bearish at this moment. Why? Look at this. Fed, the main point of the bearishness of the market currently is inflation, and the Federal Reserve of the US is very aggressive to increase interest rates. Okay, but as I mentioned, this has already been priced in the stock price in the stock market. Okay, and what we are looking at, and what I am looking at, I'm looking at how and when the Fed will stop its interest rate increasing. Okay, we have to look for we have to look for signs of economic slowdown. That is, the economic growth shrinks. Okay, let me bring out my pointer. Okay, we have to detect if there is any sign of economic growth slowing down, or as many commentators, many economists are talking about, is a recession. Is there a recession? And I can assure that if the economic slowdown hard, I mean the economic growth decelerate, okay, the Fed will stop its aggressiveness. Okay, it will stop increase interest rate, and I will show you later in my chart. No worry. And I'm sure governments around the world, including US, will resume some form of fiscal stimulus. Well, already maybe some of your friends in the UK will tell you that the UK government has recently tested heavily against those oil companies, and now they're handing out cash subsidy of some form to the public. Okay, I'm not surprised to see that. Okay, now if we detect any sign or the Fed change its aggressive hawkish tone, if the Fed becomes softer in their tone, I'm quite sure, according to our experience, that stock market will rebound, particularly those stocks that have been impacted severely will pose a very strong rebound. Okay, now this is my first point for today. So I'm not very bearish at the moment. I'm looking for signs to see whether the economy will slow down and the Fed will stop its rate hike. Okay, point number one. And point number two, on the other hand, is a bearish one. Is a bearish factor. Okay, and I will get into this point in more details later in our discussion. Okay, but at this moment, I want to say that we have to watch closely these countries, how these countries are doing. Okay, the US, China, Taiwan, North Korea, Japan, Australia. I'm not talking about Ukraine. Okay, I'm not talking about Europe. I'm talking about APEC, or more specifically, I would like you to look at Northeastern Asia. And of course, our friend Russia. All right. Now, are you ready for some charts? Now, before that, as usual, I will put out a warning on TA. What is TA? Technical analysis. Whenever we discuss charts, we discuss pattern, moving average, MACD, relative strength index, price movement. We are talking about technical analysis, but I have to give an advice that do not trade using TA alone. Okay, TA does not predict the future. It is just lagging the price. It helps to identify patterns, as I said, and yeah, we just want to get from the charts any signals to enter or to leave the market. Okay. Okay. So as I said, point number two, I point out that there is a great risk given by the geopolitical tension. Okay, so geopolitical tensions are not reflected in the charts. Okay, and we have to look at it separately. Okay, no worry, I will discuss all those points with you today in this short webinar. Okay, so now let's start. Now, first of all, we look at the US index, major stock index. Nasdaq 100 index, it is a daily chart. It means that for every one bar represents the trading of one day. Okay, Nasdaq 100 peak in the November 16,000 points. Okay, at that time. After that, well, you know that it dropped over 20%. Well, in trading terms, okay, it is not an official definition, but in trading terms, among traders, among investors, we say that whenever an index, major index, drop from its peak, recent high, drop by over 20%, it is in a bear market. Okay, well, from November to March, we can see a 22% drop. Although there is a rebound, it dropped again until recently, well, 24%. So in whichever angle you are looking at this market, it is in, well, a bear market. Okay, but I hope you can look at this one. And when I'm talking about MACD, moving average convergence and divergence. Okay, and RSI, relative strength index. Well, these are momentum oscillator. Okay, this part, this trading knowledge was well covered in our previous webinar back in January. Okay, if you are interested, you can review that webinar and know what we are talking about. Okay, it is easy. Don't worry, it is very simple. It's just a measure the momentum of the index or stock price. At this point, we can see that Nasdaq 100. Well, the momentum is not bad. I can say we are not pointing to the downside. Okay, whenever we see a cross from negative to positive, it is not bad. Okay, so now we are looking at the immediate support level at this one, 11,490. Okay, of course, if you ask me when I will be bullish again, I have to see this index back up to the key resistance at 14,220. All right, now this is the test stop. Okay, now in another angle, I will bring you to another US major stock index, the Dow Jones. Now be careful, it is a weekly chart. I want to show you something well, 2 years ago, so I use a weekly chart. Okay, for these momentum indicators, okay, they are more how can I say it, they are more appropriate to use in a longer time frame. So when I use them in a weekly chart, it is much better than in a daily chart. Okay, now Dow Jones, you know what? Now weekly charts mean every one bar represent the trading of 1 week. Okay, and you know what? We have just experienced a decline of 8 consecutive weeks. It is the longest decline seen, well, almost 100 years ago, 1923. Okay, and the immediate support is at 30,635. Here, I want you to look at the momentum, and look at this. Back in this is the point in March, April of 2020, 2 years ago. You know what happened here? The pandemic started here. At first, we saw panic selling here, and after the Federal Reserve cut rates heavily, we see the market rebound. As I mentioned at the start of the webinar, the market just spent one month in a bear market, and rebound since then. Okay, now I'm not saying that we are going to have a return to a bullish market tomorrow or next week, but I hope you can monitor closely these two indicators. Okay, when it turned up, when the MACD turning back to positive, that is the blue line crossed above the red line, and the RSI returned back to 50, we could see stabilization of the market. Okay, so watch out. Similarly, we have a S&P 500. Well, also it is a weekly chart. Well, it has a decline of 7 consecutive weeks, the longest losing streak since 2001, more than 20 years ago. Okay, so at this point, when market when the market has printed such a long record-breaking decline, I will ask myself, should you be, or you have to ask yourself, should you be bearish? Should you keep to be bearish going forward? Okay, my answer is negative. Same, back in 2020, there is a rebound, and we can see a reversal of those indicators. I am watching these two very closely, and I advise you to do so. Okay, weekly chart. Okay, now the S&P 500, the immediate support is at 3,810, something here, and key resistance over here. Whenever I see the index rebound back to this level, I will turn bullish again. Okay, remember, bear market doesn't last forever, right? All right, so back to our point number one. I say the Fed could stop at some point. They are very hawkish, very aggressive rate increasing. So what is the current situation now? This is, as you know, the central bank, Federal Reserve Chairman Jerome Powell, and Vice Chairman Brinkner. Okay, powerful people. And currently, the key rate, Fed Fund target rate, is 0.75 to 1%. Back in May, just last month, they increased interest rate by 50 basis points. This is the most aggressive rate hike since 2000, year 2000, over 20 years ago. Okay, and this month, June 15, they will announce again the rate decision, and also one more in July. Okay, well, the market just expects that we have a 50 basis points increase in both June and July. Okay, but I would tell you, I'm in doubt of this one. Okay, of further aggressive 50 point increase every time. Why? I will show you a lot of some charts. Okay, now this is a U.S. jobless rate, unemployment rate. You can see now 3.6. We are, well, we can say that it is near full employment in the U.S. Okay, that is why the Fed is very confident of increasing interest rates aggressively, and at the same time they don't worry about hurting the economy, right? But whenever we talk about inflation, which the central bank is determined to tame, consumer price CPI is year-on-year increase. The latest one was 8.3%, a little bit lower than, well, the previous one. But I want to show you another parameter, another indicator or index that the Federal Reserve are looking at. That is the core personal consumption expenditure deflator. Wow, such a long name. And usually we call it PCE deflator, or just PCE. And what do you see? 4.9 for the April, 4.9 year-on-year increase. Okay, here. And you can see we have come down a bit. Why am I showing you all these charts? I want you to monitor this data to see if inflation peaked or has peaked already. Okay, it's very important. If inflation has peaked, the central bank will not be very aggressive on rate increase. Okay. Now, next one. This is important. ISM manufacturing PMI. It describes the industry, the industrial production and manufacturing, their activity. Okay. Look at this. Now the yellow one is the PMI, and the blue one is the S&P 500. Well, just for reference. And also the horizontal red line is 50. Okay, is the level of 50. Why 50? Well, whenever you read about the PMI, any reading above 50 means that the manufacturing sector is expanding. Okay, any reading below 50 means the manufacturing sector is contracting. Okay, now you can see we are at 56.1 in May, but can you tell me it is in an uptrend or in a downtrend? It is trending down, obviously. Okay, you can see that back in this one, 2008, 2009, we had the great financial crisis, 2008, 2009, and this one falling back to 30 something. And also the S&P 500 follow down. Okay, this one is the pandemic started. Okay, and then also the S&P 500 follow to the downside. So from now on, we have to watch this very carefully, because every time this PMI crossed below 50, it will accelerate to the downside. Okay, and I'm quite sure at that time the Federal Reserve will stop their hiking. Okay, watch out. Okay, next one is also very interesting. Now, when we talk about price, when we talk about inflation, people get very upset, saying price are going up. What to do? What to do? Well, can you tell me what would you do if you see price of some goods you are buying increase, higher price? What would you do? Okay, it depends, right? This is the consumer sentiment. Okay, the latest one is 58.4. It is almost sinking back to the low we saw in 2011, more than a decade, 10 years ago. It means that consumer sentiment is racing to the downside. We call it when we have higher price, inflation. Well, consumers will delay their buying. Okay, we call it demand destruction. Okay, so we are seeing the consumer sentiment going down. And do you think that the consumers will keep bidding on goods, paying higher and higher price? I don't think so. Well, okay, they will just delay their buying, or they don't buy something at all if it is not daily necessaries. Okay. Now, I talk about the recession. A lot of economists, commentators are talking about recession. Well, a recession, not very formal definition of recession is that we have 2 consecutive quarters of lower GDP. I mean the decreasing GDP growth. Okay, look at this one. First quarter US GDP shrank, decreased 1.5% quarter on quarter. We have a red bar already. So this is for first quarter, January to March. Now we are in June. That means the second bar will come out, well, maybe next month, to represent the GDP growth in April to June. Okay, if we have another red bar like this one, do you think the Federal Reserve will keep on their rate increase schedule? No. All right. Now, the last chart on this point is this one. I will show you what happened in 2019. Okay, it's very interesting. Well, 2016, okay, 2016, the Fed start to increase rate. Okay, one time in 2016, 1, 2, 3. Oh, sorry, yeah, that one 2016 was raised in December. You know what happened? You know what happened then? Because you remember President Donald Trump? Donald Trump, when he was elected in 2016, he did one thing that was really great. What was that? He cut taxes, And at that time, the Federal Reserve, also chaired by Jerome Powell, he thought that, well, president is going to cut taxes. Oh my goodness, the economy will be overheating. So what did the central bank do? Increase interest rates. One time in 2016, 1, 2, 3, 3 times in 2017, 1, 2, 3, 4, 4 times in 2018. Okay, each time they increase interest rate by 25 basis points. Okay, and at that time they say in 2019 they are going to increase two more times. Okay, however, at the last quarter of 2018, the stock market, now this is a Nasdaq 100, the blue one is Nasdaq 100 index. At the last quarter of 2018, the market say, oh, it's too much, it's too much. And at the last quarter, October to December, the Nasdaq 100 dropped 23%. Okay, and then at the start of the 2019, the Federal Reserve said, oh, sorry, we made a mistake. We have to stop. So what was the result? Well, they said before they are going to increase interest rates by 2 times, but at the end they cut interest rate 1, 2, 3 times, 3 cuts in interest rate in 2019, and you can see the stock market rebound again. Now, of course, in 2020, you see a big bar here. This is a 50 basis point cut. This is a 100 basis point cut. Okay, why? Pandemic. Okay. So why I showed you this chart, I have to tell you that the Fed just not long ago, 2-3 years ago, they admit they make a mistake. How about this time? So you watch out, okay? And you monitor closely those indicators I talked about just a few moments ago. All right. So now this the title here is a Fed pivot. Pivot is a trader's term. It means it just turn around. Okay. Before they plan interest rate increase, and now they say, oh, sorry, I have to about turn because I make a mistake. I have to cut it. Okay, pivot 2019. Will it happen in near future? I think so. Okay. So now the following, I will show you some interesting charts on some assets, some instruments that you will find interesting, and also the patterns are quite tricky. Okay, they include stocks, forex pairs, and of course commodities. First of all, Tesla. This is a slide I presented in my February webinar. At that time, I say, well, we are going to see a downtrend. Key support, the immediate support 800, and the next target 710. Okay. At that time, earlier this year, Tesla just made a record high at 1,200 something. Okay, so what's the current situation? Yeah, this is my chart at that time. You can check out in the February webinar. Now, currently, what happened? Now, this is January, the market height of 1,210. And then not long after our webinar in February, it reached both targets on the downside, excuse me, on the downside. And then we have a rebound back to 1,150 something. And then it followed the last 100 index to go down. Okay, currently we have key immediate support at 620. And at the same time, I have to point out that the momentum indicators are not pointing to the downside. They are not bad, I can say. Okay, so if you are interested in this one, study. Okay, study what they are doing and see if it suits your bargain hunting target. Well, you know what? This company is, as I repeat many times, this company is not just a EV electric vehicle company. It is an energy company, AI company, and robotics company. Although the CEO Elon Musk is a little bit outspoken at times, but this is a wonderful company, I can say. And you know what? They have well, I believe they have no or little or no debt. Okay, they owe no money. Okay, free cash flow, free cash. All right. Now this one, I also last year I talked about the sectors. These are sector ETF, and it start with XLE, XME. These are all ETF. Okay, and you can find them in the Phillip Nova CFD platform. Okay, it represent, well, I use it ETF to, these are sector ETFs. Okay, for example, from year to now, year to date, the highest, the best performance is given by this XLE. E for what? E for energy. It means that energy stocks have been outperforming the market from the start of the year up to now. Okay, 61%. Okay, XME, what is XME? The second place, metal exploration. Okay, XLU, utility. Now you can see they just they are winning by a very wide margin, 61%, 25%, and the third place is just 6%. Okay, look at this one, XLF. F for what? F for finance. Finance sector, year to date, down 11%. SPX, what is SPX? Well, in trader terms, SPX means S&P 500. Okay, look at this one, XLK, K for what? Technology, 19%, down 19% year to date. And within this technology sector, one sector has been particularly weak, the worst one I can say. XSD was XSD, semiconductor. Okay, 26% down. All right, so we are going to stick to energy. Okay, well, you know, something happened in between, particularly in February when Russia invaded Ukraine. Okay, it drove up energy price, and our energy price, oil price, will just stick to the high side. Well, I think it is now 120 something per barrel. Okay, so you can, if you have some knowledge about the geopolitical tension, it can be translated into what sectors you are going to buy or which stocks you are going to hold. Okay, at this moment, you can see that the energy sector excel, outperform. Okay, talking about XLE, okay, you can see that we have a trading range up one higher than the other. And currently, it is also the moving averages. The red one, 20-day moving average. The blue line is 50-day moving average. They are well placed. And at the same time, you can see that momentum indicators are not showing any turn, any weakness, any softness. Okay, they are still pointing to the upside. Okay, that is why well, this ETF XLE excels. Okay, crude oil. Yeah, I just mentioned that behind all this XLE increasing, this is a very classic book type bullish continuation pattern. Okay, there was a uptrend, and that after a consolidation, a triangle, the uptrend continue. Okay, we call it a bullish continuation pattern. Same, the momentum indicators are showing no softness at the moment. Okay, oil sector. So oil sector, we call it a value stock sector. Okay, I have to make a mark that well, a point that in case the Federal Reserve stop raising interest rates and the tech stocks sector, technology sector just rebound, you could probably see that the funds capital will shift from this oil sector, value sector back to the technology or growth stock sector. Okay, well, money and the capital just jump ship to locate, to search for better return. They want a faster horse in time. Okay, so watch out. Now, this is a PetroChina listed in Hong Kong. Well, the pattern is more or less like the crude oil. Okay, after a consolidation, okay, triangle up to the upside. Okay, PetroChina. All right. So a lot of audience members ask me about this stock and Alibaba tech stock in China, and it is listed in Hong Kong, also in the US, 9988. So I have found a quite interesting pattern or movement, price movement here. Well, back in 2020, October 2020, it marked a high around 309, and since then it has entered a very long-term decline. Okay, you can see that. But recently we see that. Okay, a breakout from the long-term downtrend. Another angle to look at this stock, 9988 Alibaba. All right. Okay, our immediate target is 123. Next target 135. Also, again, I like to see that these momentum indicators are showing no softness, weakness at the moment. Okay, still trending up. Okay, so of course this horizontal blue line is our key support. Whenever I see the stock price falling back to this 90 Hong Kong dollar, change my view, I will. Okay, so this is Alibaba. Another one quite interesting, we have found this one, China Resource Beer. Okay, we have found a round bottom. Bottom is round, as many traders will tell you. When the bottom is formed, it should be round, and when a top is formed, mostly the top is sharp. Okay, now we are forming a round bottom. Okay, after a fall in March. Also, indicators are not bad. Okay, so have a look. And Geely Automobile, after almost 2 months of consolidating range bound in 2 months, we see a breakout here. Okay, now we see the uptrending 20-day moving average is providing support. Okay, but however, I mark it in red, saying that I'm seeing some softness in the momentum indicators. Okay, the blue line is about to cross below the red line. Okay, so take note of this, and yeah, be careful. I mean, and Pinduoduo, it is well internet retail stock. Okay, platform internet retail platform stock listed in the US. It is a Chinese company. Okay, same like the Alibaba. A long-term downtrend have been bust. Okay, we see a breakout from a long-term declining trend line. Okay, another angle. We're going to see that. Okay, you see, another golden, we call this a golden cross, meaning the faster moving average, 20-day moving average, the red line has crossed above the blue one, and it is a good sign that saying that the bullishness will continue. Okay, but at the same time, you can see that the stop price has crossed above the upper Bollinger Band. Upper Bollinger Band, well, we have upper Bollinger Band, this one, red line, and the lower Bollinger Band on the underside, okay, low side. Well, in theory, 95% of tradings occur within these two upper band and lower band. Okay, now you can see that Pinduoduo PDD has crossed above the upper Bollinger Band. It means it is a little bit overstretched. Okay, so but the momentum are still good. So trade with caution. Okay, so it will in times make most likely make a pullback and up again. Okay. I hope that you will find it interesting. Okay, now after stock, let's talk about gold. Okay, this is a slide I showed in the February. Okay, at that time our target was 1,935. Okay, at that time I said the momentum indicators are trending well to the upside. Now, well, 3 months, more than 3 months later, well, in fact, gold peaked at 2070 back in March. Okay, and then it has another high at around well 2000. And now I have to see gold rebounding back to $1,900 per ounce to change my view to the upside, to change my view so that I will have a bullish view. Otherwise, I would say it will seek to sink further back to the immediate support at 1,800. Okay, and well, the momentum indicators not very compelling, not very well encouraging at the moment. Okay, so a lot of things happen in these 3 months. Why gold seems to be under pressure? It is because the US dollar has been quite strong lately. Okay, US dollar against the Japanese yen. Again, we have a classic bullish continuation pattern. Well, back in March, dollar yen, we call it pair dollar yen. Okay, dollar yen, well, start its uptrend for 2 months. 2 months. Okay, after that, it consolidated in the trend channel for around 1 month, and then it broke out again. Okay, and it's very interesting for this for the yen, Japanese yen. You know what? The Japan Central Bank, the Bank of Japan, is well, I can say is printing money to keep the 10-year Japanese government bond yield at or below 0.25%. Okay, so at the same time, we are seeing on the other side of the world, the US is increasing interest rate 50 point a time. Okay, this wide margin or increasing margin in bond yields just put a heavy pressure on the yen, and you can see US dollar yen is surging up. Okay, we can see now the 20-day moving average is back up above the 50-day moving average, and this number 133 is and this morning I think it is 134 this morning. It is a fresh 20 years high for dollar yen. Okay, will it trend up further? I think so. Okay, if you see that the Central Bank of Japan seems that well, we are going to keep the bond yield as near zero. Okay, for whatever cross. Okay, well, they will print and print, and the Japanese yen could be under constant pressure. Okay, our next target should be 136, and well, it could be up to 139. All right, another one, this one I have to point out. Now, if you follow our January momentum webinar, you will know that I can suggest a change, okay, a change here to the upside as indicated by the momentum indicators, MACD and relative strength index. And also this one, just before June or around the start of June, we see another one here, okay? And then this one, crossover 20 over 50 days moving average is another confirmation for the uptrend. Okay, if you are a good trend follower, you are looking at these signals. Okay, I think this is the last one. Australia dollar against the US dollar, and again we see across 20 over 50 day, and yeah, back in April, as I mentioned, the top are usually sharp like this one, and at the same time it could be indicated by the momentum indicators, MACD, RSI. You see, downtrend, and its recent rebound could also be traced using these indicators. But currently, I can see that there is some kind of softness in the momentum indicators. So, and trade with caution. Okay, so now all these are those charts that I want to share with you today. Any question? But before you ask me one question, any question, I want to ask you one question. If you have a very clear mind, you should ask me one question. That is, hey Ming, how about the second point when you say you are very bearish on the market, or there is a major bearish factor in the market? What is that? Yeah, you're correct. I have to repeat this one. APEC geopolitical tensions, and that one, if you ask me what is the major bearish factor, I won't say inflation, I won't say Federal Reserve, I will say this one. Okay, I'm going to show you some slide, and then I'll let you ask some question. Now, if maybe you are quite busy and not paying attention to news or political news, international news, I can tell you back in May last month, these 4 countries, US, Japan, India, and Australia, we call them core, quadrilateral security dialogue. Okay, they met in Japan when Joe Biden, president, met with Kishida, Japanese PM. Okay, they had a meeting there. What was that about? Security. Security on what? Against one major country. Okay, in the area. You know whom? Well, in May, when these 4 countries, the heads of these 4 countries were meeting in Japan, some funny thing happened over the sky of Japan. Okay, this chart is given by the Ministry of Defense, Japan. Six jet fighters or bombers, including 4 from China and 2 from Russia, were circling above, well, around this area near the Sea of Japan for 13 hours. 13 hours, 13. And you know what? These six airplanes, they were not carrying conventional bombs. They are carrying some funny things. All right, we call them strategic weapons. Okay, what are strategic weapons? You check. All right. So it is to me, it is very well, it is quite worrying, I can say. And then lately we can see that this one, US and South Korea will fire back 8 missiles of their own after North Korea fired 8 missiles into the Sea of Japan. Okay. And then we have South Korea and US jet fighters, well, going to show of force, okay, to North Korea. Well, you know, we have a new president also in South Korea, Mr. Yoon, Y-O-O-N. And I think, well, it is 180 to the previous president, Moon, M-O-O-N. This new president is appears to be a very strong man. I haven't seen South Korea and US, well, show of force to North Korea in recent years. Okay, so this is to me very alarming. Okay, do you know this happening? Well, a US jet fighter cut across an Australian plane. Okay, it is a P-8 for surveillance, so for surveillance plane. Okay, over the South China Sea. Okay, it just happened also in May last. Okay, or the start of this month, June, and not far away, just in South China Sea. Okay, and then we have also this one, Canadian fighter jet warplanes. Okay, got some interception over North Korea. Okay, and the last one, I find it very alarming also. Russia say they are going to send more than 40 ships to an exercise in the Pacific. Okay, do you remember that well, back in February or January, a lot of Russian troops were over the border of Ukraine. At that time, they also say that they are doing some exercise. Okay, now they are entering Pacific Ocean and for exercise. And well, I would be very alarmed. In fact, do you know that Japan has labor to the north? Who is the labor to Japan to the north? Yes, you're right, Russia. Okay, I think Russia is a very good labor. Am I right? Okay, thank you very much. This time, we are open to questions.
All right. Thank you, Ming. It seems like we don't have any questions from our audience at all. And since
Okay,
time is up as well, let's conclude the webinar here.
okay. And thank you very much.
All right. Thank you, Ming, for the insights tonight. And we will be sending everyone a link to today's webinar recording so you can watch it again if you'd like to. And if you have any further questions for Ming tonight, you can send them to us via the survey that will appear at the end of the session, and we will respond to you via email.
Yes. Yes.
And yep,
One more
that's all.
point, Ming Hui, one more point.
Right.
And we are going to have webinars in July and August. So I mean to the audience members, if you want some topic or some particular points you want me to share with you, to exchange with you, or to discuss with you, just let Ming Hui know and write to Ming Hui, and I will include those points in our following webinars. Okay.
All right. Thank you very much. That's
Thank you
all
very
for
much.
today. And thank you again, Ming, and thank you everyone for your time tuning into this webinar tonight. Have a good night.
Okay. Thank you. Bye bye.